Swift just announced a major milestone. After completing the design phase with a global group of banks, they are now building the first MVP of a blockchain-based shared ledger, one that will enable interoperability between banks, tokenized deposits, and 24/7 cross-border payments. The MVP is planned to go live with real-world transactions this year. They named the architecture Hyperledger Besu, EVM-compatible, open source, designed to integrate with a broader digital asset ecosystem. They named the participating banks. They named the technology stack. They described the settlement options, the compliance processes, the interoperability goals. In 400 words of announcement, they mentioned almost everything. They did not mention XRP once. Now, here is the question I want you to hold for the next 8 minutes. In a world where Swift is legally cautious, institutionally conservative, and operating under the scrutiny of every central bank and financial regulator on Earth, what does it mean when a technology is too embedded to name publicly? Because here is what the technical documentation reveals. Hyperledger Cacti, the plug-and-play connectivity toolkit that Swift's ledger runs on, has native ledger connectors that include the XRP ledger. Ripple contributed the Interledger Protocol implementation to Hyperledger specifically to connect XRP ledger with Ethereum-based blockchains like Besu. The connectivity is not speculative. It is documented. It is already built. It has been built since 2021. And simultaneously, on the same week this announcement dropped, the DTCC, which clears and settles virtually every U.S. securities transaction, added a Citadel executive to its board. Citadel co-led a $500 million investment into Ripple 4 months ago. None of this is coincidence, and today we are going to prove that. Let me make the Swift XRP technical connection precise, because this is the part of the story that most coverage is either overstating or understating, and precision is what makes it useful. Swift's new blockchain ledger is built on Hyperledger Besu, an Ethereum virtual machine-compatible architecture. That means it can execute smart contracts, interact with EVM-based tokens, and connect to any network that speaks the same technical language. Now, here is where XRP enters. Hyperledger Cacti is an open-source toolkit designed to connect different blockchain networks, a universal translator between distributed ledger systems. It uses plug-and-play ledger connectors. And those connectors include, natively and by design, the XRP ledger. The connection between Swift's new ledger and XRP ledger is not a partnership announcement. It is not a press release. It is infrastructure built into the open-source toolkit that Swift's own system relies on. And Ripple is not a passive participant in this architecture. Ripple contributed the Interledger Protocol implementation to Hyperledger specifically to enable connectivity between XRP ledger and Ethereum-based chains. That work was done in 2021. It has been sitting in the foundation of what became Swift's blockchain infrastructure ever since. What this means, practically, a bank operating inside Swift's new ledger ecosystem that wants to use XRP as a bridge asset for cross-border liquidity can do so. Not by breaking the system, not by going around Swift, by using the existing connectivity that is already built into the architecture. Swift's announcement also confirmed that their broader blockchain initiative includes XRP as an optional liquidity rail via partners, giving banks access to Ripple's products without mandating XRP's use. The word optional is doing a lot of work in that sentence. Optional means available, and available inside Swift's network, the network that moves $5 to $7 trillion every single day, is not a small thing. Let me now add the DTCC development, because it connects to the Swift story in a way that the market has not yet priced. The DTCC, the Depository Trust and Clearing Corporation, is the infrastructure backbone of American financial markets. It clears and settles virtually every U.S. equity, bond, and derivative transaction. If you have ever bought a stock through any U.S. brokerage, the DTCC processed that settlement. This week, the DTCC announced 4 new board members. One of them represents Citadel. 4 months ago, in November 2025, Citadel co-led a $500 million strategic investment into Ripple. That investment was not passive. It was described as strategic, meaning Citadel has an active interest in Ripple's business development and positioning. Now, a Citadel-affiliated executive sits on the DTCC board, the governance layer that steers DTCC's strategy on digital assets, tokenization, and emerging Fintech. And here is the connection that most people missed entirely. The DTCC has existing patents that explicitly mention XRP and XLM as digital liquidity tokens in a cross-ledger liquidity framework. Not Bitcoin, not Ethereum. XRP specifically named in DTCC's own intellectual property as a tool for cross-ledger settlement. Separately, DTCC's clearing subsidiary has listed Ripple Prime, formerly Hidden Road, as a participant in its architecture. Ripple Prime effectively plugs the XRP ledger into DTCC's decentralized clearing and risk management stack. The pattern here is not random, it is systematic. Swift's infrastructure has XRP ledger connectivity built in. DTCC's patents name XRP explicitly. DTCC's clearing system has Ripple Prime as a participant. And now, a Citadel executive whose firm just made a $500 million strategic bet on Ripple sits on DTCC's board. None of these connections were announced with press releases. None of them generated mainstream financial media coverage. They are infrastructure moves visible only to people who know where to look. Swift's hidden XRP connectivity, the DTCC patents that name XRP explicitly, and the Citadel Ripple DTCC board connection. This is the kind of infrastructure analysis that never makes a headline, but tells you more about XRP's actual positioning than any price prediction ever could. Let's keep going. Let me now show you a growth figure that I think is genuinely one of the most significant data points in the XRP ecosystem right now, and it has received almost no mainstream attention. At the start of 2025, the XRP ledger held approximately $24 to $25 million in tokenized real-world assets. By the end of 2025, that figure had grown to approximately $568 million. That is a 2,200% increase in a single calendar year. Let me put that in context. In the same 12 months, the Nasdaq returned roughly 25%. The S&P 500 returned approximately 20%. The XRP ledger's real-world asset base grew 2,200%. The asset classes driving that growth, U.S. Treasury debt represents $282 million of the current $480 million base. Tokenized government debt, the most conservative, most regulated, most institutional-grade asset class. Available is the largest single category on XRP Ledger's real-world asset stack. This is not speculative DeFi yield farming. This is U.S. Treasury bills settling on XRP Ledger infrastructure. If stablecoins are included in the calculation, the XRP Ledger's total tokenized value exceeds $821 million. ARK has $1 billion in tokenized assets in the pipeline for XRP Ledger. Analysts tracking XRPL real-world assets are projecting a range of $3 to $6 billion in tokenized value on the network by late 2026 if current momentum holds. At the 6-month mark, the trajectory suggests $700 million to $1.5 billion. At 12 months, $1.2 billion or above. The XRP Ledger is currently the 8th largest network in the world by distributed real-world asset value. Not by market cap, not by speculative token value, by the value of real, regulated, institutional-grade assets that have been deliberately placed on its infrastructure. That ranking will not stay at 8th. Let me return to the question I opened with, because I think the answer is important enough to deserve its own section. Why did Swift's announcement not mention XRP? The instinctive reaction in most crypto communities is omission equals rejection. If SWIFT wanted XRP, they would have said so. But that reading misunderstands how institutions at SWIFT's level communicate. SWIFT is not a startup making partnership announcements to attract retail investors. It is a messaging cooperative owned by over 11,000 financial institutions in over 200 countries. Every word in its public communications is reviewed by legal teams, approved by member banks, and calibrated against regulatory scrutiny in dozens of jurisdictions simultaneously. In that environment, naming a specific cryptocurrency as a settlement asset before the regulatory frameworks in key jurisdictions have been finalized creates legal liability. It creates regulatory pressure. It creates questions from member banks and jurisdictions where crypto is not yet clearly defined. The safer move is to describe the architecture: interoperable, open, able to connect to the broader digital asset ecosystem, and let the architecture speak for itself. The architecture speaks clearly. Hyperledger Cacti connects XRP Ledger natively. Ripple built the Interledger Protocol implementation that makes EVM XRP connectivity possible. The banks partnering with SWIFT to build this ledger include multiple Ripple partners who are already using XRP-based infrastructure. SWIFT did not mention XRP because mentioning it publicly would create complications that the infrastructure already handles privately. That is the way institutional adoption actually works, quietly, technically, before the press release. Let me close with the synthesis because the individual pieces of today's video are each significant, but the combination is what I think is most important to hold. SWIFT is building blockchain infrastructure that connects natively to XRP Ledger through documented, shared open-source connectivity. The DTCC has patents naming XRP for cross-ledger settlement and has added a Citadel executive to its board, 4 months after Citadel made a $500 strategic investment in Ripple. Ripple Prime is a participant in DTCC's clearing architecture. The XRP Ledger's real-world asset base grew 2,200% in 2025, and analysts project $3 to $6 billion by end of 2026. None of these developments were announced with fanfare. None of them generated mainstream financial media coverage. None of them are reflected in the current XRP price. Infrastructure adoption at the institutional level does not announce itself through press releases and Twitter threads. It announces itself through patents, board appointments, open-source code contributions, and tokenized treasury debt quietly accumulating on a ledger that most retail investors still think is speculative. The gap between what is being built and what the market currently prices is the structural opportunity. And the calm investor who understands what is being built precisely, technically without hype, is the one who holds through the noise with conviction grounded in evidence rather than hope. The evidence is clear. The infrastructure is real. The adoption is happening. The price catches up when it catches up. SWIFT's hidden XRP connectivity, the DTCC Citadel Ripple chain, the 2,200% real-world asset growth, and the structural case for why institutional emission is more bullish than institutional announcement. Every week, this channel tries to give you the clearest possible picture of what is actually being built underneath the noise, because the real story is being written in patents, architecture, and tokenized treasury debt. Thank you genuinely for watching. Drop your thoughts in the comments. I read every single one. Stay calm, stay precise.